So you're going to start your own lawn mowing company and we're going to start accounting for it. So we're going to use a Windows operating system, so we're going to use Microsoft Excel. If you're using a Mac computer, then you can use the program called Numbers. So the first thing we're going to do is do our chart of accounts. And then we're going to do assets. And all our assets will be numbered in the 100s. So first count is 100 and we'll have cash. The next count is 101 and it will be equipment. And that's all you need for assets right away. Liabilities, the only account, and we'll start at 200, is going to be sales tax payable. And then you'll have owner's equity. We'll start that off with a 300 number. Next, you will have to call that whatever your name is that's starting the company. So we'll just say that this person's name is Joe Smith, so it's Joe Smith, comma, capital. The next accounts you will have to have are revenue accounts. And we'll name revenue 400, or number it to 400. We'll name it, since it's lawn mowing, it's mowing revenue. And then of course every business has expenses, and we'll count that 500 for the first one. And we'll have depreciation expense, which is when you buy a mower, it will only last for so long, so you depreciate how much you paid for it, the mower. Then we'll have 501, and that will be gas expense, because you need gas so your mower will run. And then 502 will be repair expense. In case your lawnmower breaks down. So now we need to make our general journal. So there's our general journal. And then we'll have a date column, account title, a reference, a debit, and a credit. So say on May 1st, 2011, you start your company. So to start your company, you have to put cash into it. And then you need your capital account, because your company's worth something now. So you put money in, so cash will be credited for 1,000, and your capital account will be credited for 1,000. So that's how you start your company, and that's how you account for it when you put $1,000 to start your company. Next, you'll need to buy a lawnmower. So on the May 3rd, you buy a lawnmower. So we'll have equipment, and then we'll have cash here. So you paid $500 for the lawnmower, so you have equipment of $500 now, and you paid cash, so you have $500 less. And then on the 5th, so you can start mowing, you go out to the gas station, you buy gas. So we have gas expense. We'll say it's for $20, and you pay for it in cash. So here's $20 out in cash. So on May 7th, you mow your first lawn and collect money for it. So you will have cash. Let's say your grandfather gives you $21.20 to mow his lawn. So then you'll have mowing revenue, and that will be $20. And then the other part will be sales tax payable, and you credit that for $1.20, because that's how much the sales tax is. So that's how you account for recording revenue with sales tax. And then say on the 9th you find out that your mower needs repairing, so you go to someone and they're going to repair it, and they cost you money, so you have repair expense. Let's say it costs you $10 for them to fix your lawnmower, and you pay it out in cash. So there is $10. So now you know how to start your company with cash. And then we bought a lawnmower, and we learned how to account for that. And then you bought gas, so you could start your lawnmower so you could start mowing, and we learned how to account for that. And then you mowed your first lawn and got paid for it, and we learned how to account for that. And then your lawnmower broke down and you had a repair expense, and we learned how to account for that.